وأود تقديم الرئيس التنفيذي الفاضل سوني الكهلي، وكذلك الأستاذ عمر الشيخ نائب الرئيس التنفيذي، والفاضل شيكر المدير المالي، والفاضل مسؤول الاستثمار بالشركة الأخ ديتيا أو الفاضل ديتيا. والآن أدعو الفاضل الرئيس التنفيذي لتقديم العرض المرئي للشركة.
Good morning and Assalamu alaikum everyone.
Good morning.
Really, good morning, and we really appreciate the initiative by Muscat Security Market and CMA to start this process of investor relations and investor presentation. It will go a long way in putting forward company's performance in front of the investing public, and also have an educational purpose in general to tell everyone how the company is doing in various spheres of business. It's really a great initiative and we really appreciate this. So with this, we will start the presentation and I'll take you through to the various aspects of the business which Dhofar Insurance has performed in last 6 months. And we'll take you through, and in the end, we will be open to a question and answer session once the presentation is over. So we look forward to your indulgence and participation in this particular presentation. So agenda in general is generally we will go with some introduction, some industry overview, financial performance of Dhofar Insurance, and then we will be open for question and answer session. Yeah, so we'll start with our vision, mission, and values. Our vision is to become the insurer of choice for all the stakeholders. Our values start with the integrity in all our actions and care for our community, because insurance is related to the social service. It's not only a business venture, but insurance is also to help the community and care for the community, which we do and we have done in the past during various cyclones where we have come forward and done volunteer work as well as the insurance related work as well. Then commitment to excellent quality, that is our commitment. We want to do that at all times, and we have to be professional at all times. That will come out with the training and experience of our people along with our systems. And we have to be responsible to all our stakeholders. The stakeholders can be shareholders, the regulator, customers, our own employees, and society in general. So these are the all areas which constitute our values, and we are working and striving every day to take it forward and be true to our values. And our mission is to be the #1 insurer, first-class insurer, which everyone wants to be associated with. I'll just introduce you to our board of directors. We have a very well diversified board with great experience in various spheres of business. In the insurance field, we have 2 of our directors who have a vast experience in insurance and reinsurance industry, and one of them is a trained actuary as well. So they bring with them great experience and inputs for taking Dhofar Insurance forward. Other board members we have who have great experience and vast experience in the banking industry, in financial services, in legal matters. So our board is majorly and majority independent board with professional people constituting the board and giving their inputs at all times for the benefit of the company and governance. If we go to the next slide, we will look at a snapshot about Dhofar Insurance. Like Dhofar Insurance started in Sultanate of Oman in 1989, and it is today a leading composite insurance company. Composite insurance means that it not only does general insurance business, which is motor, property, other lines of business, but also does life insurance and medical insurance. So that's why we call it composite insurance, because it is covering all areas of insurance. And we therefore are able to give and present to our customers a well-diversified range of products, which is not only for the benefit of corporate customers, but also individual customers, which can be benefited from our products in that space. Dhofar Insurance is the company which has the largest branch network all over the Sultanate of Oman. We are present in each and every these governorates of Oman, and even a small town, our branch is there. So we are there, and many of our customers like to come to our office. They have relationship with our customer service representatives and vice versa, and that service is provided. But at the same time, we are also having online channel. We have relationship with brokers and bank assurance partners as well. So all areas of distribution and bringing customer service to the door of the customer, we are working upon that. And board, as I already talked before, it's an independent, diversified board, and our management team is well qualified with experience in insurance industry and other related areas. When we look at the strengths of Dhofar Insurance, I will take you through one by one. The first strength which we just talked about is the diverse distribution network. We are present even in the smallest location of Sultanate of Oman and bringing service to the door of the customer, where they can come to our office and access the insurance related services. We have trained human capital. We have 315 employees with 83% Omani employees, and we are working on training more and more youngsters. We are taking trainees from Omani universities, and then we are training them to be the future leaders and future contributors to the economy as well as insurance industry. On technological innovation, we have been working since a couple of years on transformation on the digital side. We are working on WhatsApp bot, mobile app, plus online service. Mobile app is under maintenance at this time, but we are working on other online channel where from our website, someone can go on the online space and they can buy the retail products, which are more of the kind which they like to take. And then for insurance industry, reinsurance is very important because it provides capacity and it provides at the time of very large events, catastrophe events, the strong reinsurance partners are very important for us. And Dhofar Insurance has a track record and consistent track record of having highest rated reinsurance partners for more than 2 decades. And it is demonstrated at the time of cyclones like in Gonu, Mekonu, and recent Shaheen cyclone, where they had a devastating impact on the people, on the industry, on the corporate customers, as well as individual customers. But we were able to pay claims very fast on basis of our own financial strength, as well as backed by the reinsurance support from the well-rated, very strong reinsurance partners. And customer centricity is the focus because we always keep customer in our view, and all our actions are related to giving the best service to our customers. And for that, we have also a 24/7 call center, which helps in that. And that was also at the time of COVID, when the branches were closed. At that time, our call center came in very handy to help in providing customer service to our customers who could not be out of their home and they needed service. So from digital and call center, we were able to help provide service to our customers during COVID times. And all these efforts will lead to sustainable value creation, which will be not only for our customers, for employees, to our stakeholders like shareholders, to the regulator, and also to the whole economy as such, which we will bring in the benefit to the economy by working for all the stakeholders. This is just a view that we are present in all governorates of Oman, and we are even in Musandam, Buremi, Batna, all areas of Dhofar Insurance is present. So I'll just take you briefly through some of our basket of products on the retail space. These are like motor insurance, everyone utilizes that, and we are present in motor insurance. We are present in health insurance. We are having products for life insurance as well. We have products for home insurance. Like if I talk to you about home insurance during Shaheen cyclone, hundreds and thousands of houses were damaged in area of Batna and Kabura, Suwaik, all those areas. And due to our home insurance cover, thousands of customers could get their due from the insurance side, whosoever were insured with us. So that really helped the customers during the cyclone. Then we have products for our SME clients who are having small industry or large industry, or people if they want to go for travel, we have travel insurance for them. So these are some of the products which are in our bouquet and which are catering to our customers. I will now take you through to some of the innovations which Dhofar Insurance has done, and these are first of its kind in the insurance space. In the Sultanate of Oman, we are the first insurance company who has installed the Mulkiya printing vend machine at some of our select branches, where once the customer buys insurance from us, they can straight away go to the Mulkiya printing machine, take the Mulkiya, and then they can go. They need not go to some other location. So this brings the service to our customer, and at single point of contact, they are getting the whole insurance, motor insurance areas covered, buying insurance and printing Mulkiya as well, and then they can go. So at our select branches, like Ruvi, they can come and take it, and some of the other areas also we are having this facility where customers can be very useful for them. If we go to the next innovation, which we have done, it is the usage-based car insurance. This is also the first time, and we are the first to launch this product in Sultanate of Oman, where it is kilometer-related usage for certain customers who have more than one car. Sometimes they find that their second car is not fully running, and still they have to pay the same insurance premium, even if it is running 1,000 or 2,000 kilometers. For the comprehensive insurance space. So there they can take this particular product, and it will be agreed in the beginning of the policy that how many kilometers is the benchmark. If it runs less than that kilometer, they will be given discount, which is also pre-agreed discount at the time of the renewal. So this helps the customers who have more than one car and the usage is not there. So they can optimize their premium outgo by this. And this other one we have is the drive-through insurance. This is also the first, Dhofar Insurance, the first insurance company, and maybe the only in Sultanate of Oman to have this facility of drive-through insurance at our Al Khuwair branch, where if the customer doesn't want to get out of the car during hot weather, they can keep sitting in their car, go to our window and get the renewal of the motor insurance done and take it in the comfort of their air-conditioned car. So this is, we were the first to do it, and we launched it during the COVID times to help contactless service to all our customers. Another innovation which we have is the gadget accidental damage cover, which we are selling through Apple resellers and other those like Montel and Oridu, those kind of who sell these mobile phones, and with that, this is also attached to it if customer wants. And one more innovation which I want your attention to is a short-term medical insurance which we launched for the travelers or tourists to Dhofar region. We are aware that during Kharif season, tourists go to Dhofar region, and due to the weather condition, there is a possibility that some of them may get sick. To help those tourists, we have launched the short-term medical insurance, which the tourists can buy for a period of 7 days, 10 days, 15 days. And during the time of their enjoyment in the Kharif season, they can, if something happens, they can benefit from the medical insurance, which we are providing for that short period of time, which is very useful product for travelers to Dhofar region during Kharif season. There are some of the awards and accolades which Dhofar Insurance has received. Every year we have received at least one award, not only within the Sultanate of Oman, but also from outside Sultanate of Oman as well. Our Dhofar Insurance has been awarded due to the good performance in the past 4 years or so. I'll just take you briefly through industry overview. Oman insurance sector. And in general, I think most of you may be aware, but still I will quickly just give you a brief that there are 19 insurance companies, out of which 8 are conventional national companies, 2 are takaful national companies, and 9 are foreign companies. And top 5 companies contribute to 63% of the premium of the whole sector. There are some regulatory changes in the last 1 year or so, which I want to bring your attention to. One is the risk-based capital regulation, which is introduced from 2022, IFRS 17, which is effective from 2023, and medical health insurance, which could be mandatory in future. That is expected sometime in future, which is now, I think, regulator and other related ministries are seized of this matter, and they will take a decision at appropriate time when they would like to introduce mandatory health insurance. But I just want to tell everyone that we are well equipped and we are conscious of these changes, and we have worked our plans how to handle these regulatory changes and what is coming up. If we look at the premium, so there is a growth, although overall industry-wise, the CAGR is only 1.7% in last 5 years. But still, it's a growth path. Considering the COVID times, still there is a growth, and we are hopeful and optimistic that the way the things are going, the Oman economy will grow much better, and as a resultant effect of that, insurance sector will also grow in future. And business mix, if we look at of industry, major business is coming from general insurance, and other medical and life insurance constitutes the less than 50% part. If I move and take you through briefly to the financial performance of the Dhofar Insurance in the first half of this year. So I would like you to look at the gross written premium, where compared to the same period in 2021, the Dhofar Insurance has grown by 30%. And if I look at the underwriting result, there is a growth of 2%. If I look at the profit after tax, it's a growth of 18% in the same period last year. If we look at the premium composition for the Dhofar Insurance, we will find that non-motor is increasing steadily. Life is on a growth path. All our lines are growing, but some lines are growing more than others. Due to that, this composition is changing. So our non-motor is increasing. Life, we are doing well. And in medical also, we are growing the business. Motor is also growing, but its composition is now well balanced. And if we look at, it's quite well balanced portfolio. Yes, so these are financial highlights, and which also tell you the same thing which we talked before, like growth in premium by 30%, underwriting results in growth by 2%, investment growth by 25%. And then if you look at profit after tax, it's 17.9% growth. And there is also EPS is also better by 17%. And return on equity, there is also 12.3% improvement on that. So we look at some key performance indicators, and there the loss ratio is slightly higher to 70% compared to 66 on the same period last year, which is due to the increase in motor claims, which has happened this year, because during Corona times, people were not driving cars, they were locked down, so the frequency of claims was less and severity was also less. But now, since it is open, a lot more cars are on the road, which has led to increase in frequency of accidents. So more claims, and even claim size is also increased. Expense ratio is under control, and due to loss ratio, which is more by around 3% plus, our combined ratio is slightly higher by just under 1%. So if I take you through our investment composition, we have mainly most of our assets are in fixed deposits, and rest are very balanced in equity and bonds and real estate.
Thank you.
Dividend part, we are given consistent dividend since 2 years, and it is in 2020 it was 10%, and in 2021 it is 15%.
Yeah.
Capital and solvency, we are well capitalized as per the requirement. Yeah, excuse me.
It's also said now.
Mr. Shivakumar.
Sorry.
Okay. So we are well capitalized as per the regulatory requirements, and solvency also we are very comfortable on the solvency margin, and it is above the requirement from the regulatory side. So with this, I bring my presentation to end, and we express our deep gratitude and appreciation to our leader, His Majesty Sultan Haitham bin Tariq, for his vision and guidance, which sustained the country's success, growth, and prosperity. We thank Ministry of Commerce and Industry and Investment Promotion and the Capital Market Authority for the continued guidance and support. We also would like to thank the shareholders, reinsurer, customers, and employees of Dhofar Insurance for their trust and continued support. And I also thank all the participants who have joined and listened patiently to us as of now. So we are now open to question and answer session. Mr. Bishan, I think you are on mute, so you may
Good morning.
proceed. Good morning, Mr. Bishan.
Thank you, Mr. Sunil and team. That was very enlightening. Thank you so much for the presentation. I actually have one regulatory linked query. We've heard again, I'm calling from Vision Asset Management, by the way. We've heard about some rumors
Vision?
about Vision Asset Management.
Vision Asset Management. Okay.
Yes. We've heard some rumors that there might be a minimum capital requirement for insurance companies from the current 10 million to 20 million. Could you just shed some light on that? Is that just sound bites, or is there more to it than that? If you could just clarify, sir.
Yeah, see, this is more like, I would say, nothing firm has been discussed, and because it's a regulatory, and as of now, I cannot confirm anything on it since I have not got anything official on this part. So I cannot help you on this. So because it's nothing
that's
firm
fine.
or
In fact, that's more than
official.
helpful. Even the fact that the CEO of a leading insurance company has not heard itself puts to rest that it's just speculation at this point in time. So we're more than actually okay with that answer. Yeah, that's fine.
Yes,
that's fine. All right, fine. Thank you. I'll come back later if there's something else. Thank you, sir.
Thank you.
Any questions?
Yeah, Mr. Joyce.
Good morning.
Yes.
Good morning, Mrs. Kohli and team. Thank you very much for the presentation, and congratulations on the good set of numbers. Just wanted to get some details about your claim ratios, because you have mentioned the motor claim has increased, but at the same time, we are seeing that there is a significant reduction in your health-related claim ratios. Can you throw some light on where do you see the claims settling in going forward, and what's your target claim ratio?
Yeah, Mr. Joyce, you're from which organization?
I'm from United Securities.
United. Okay, welcome to this meeting. So the claim ratios, what we talked about is that today our claim ratio is 70.4%. Overall basis, and where we had high claim ratio was motor, but we have good claim ratio in medical, fire, and marine and life. So there our claim ratio was very good. So on back of that, and due to our diversified portfolio, since we are not heavily invested into one sector. And we are well diversified in medical, fire, marine, and life. So due to better claim ratio in those areas, we were able to have overall claim ratio of 70%. Overall basis, if I may say, I will target a claim ratio just below 70%. It is 70.4 now. If my target is around 67, 68, I'm at good space, because overall basis, I want to be less than 100% in the combined ratio, and anything which is 95% combined ratio is considered good for insurance companies. And anything better than 95 is definitely, that is what we want. But in the sector where in last couple of years there was COVID, and due to COVID, there were a lot of medical claims, people were going into hospital. There were a lot of claims in life due to the unfortunate deaths of people. But at that time, motor was better because people were not traveling. So that is the beauty of the balanced portfolio, that at some time, if something happens, some other portfolio will give you better results. So due to that reason, earlier during COVID times, we had high losses in medical and life, but good results in motor. So we managed to have good results there. Now in 2022, motor claim ratio has increased, but we have managed, due to our good underwriting and reserving mechanism, we are having good results from the other lines of business. And overall, as an insurance company, we are able to have good results. So my target will be having 67 to 68% overall loss ratio and around close to 95% combined ratio. So that will be good for all stakeholders.
Yeah, thank you very much. And Mr. Sunil, I just observed that in Q2, we had a very high claim ratio. Any specific reasons for that? Where is it coming from? Is it coming from motor or from any other segment?
I think it is majorly motor, because see, till 2020, there were lockdowns were happening, even in the earlier past of the 2020. So due to that reason, less cars on the road, and there were less accidents. After that, after I think April and May, suddenly everything was open and people were driving and accidents increased. And then the number of claims started coming to us. So that is why the effect of that came into the Q2. And then that's the reason the claim ratio increased. We are working on the underwriting side, on the claims management side, how to control this aspect, because we definitely want to make all lines profitable. So we are working towards that, and we are conscious of that aspect of it.
Perfect, understood. Next is on your reinsurance scenario outlook. I see that reinsurance commissions has dropped drastically from around 10% in last year to 6% this year. So, why do we see a pressure in terms of the reinsurance commission, and how do you see the reinsurance ceding margins going, the trend in ceding margins, and the commission income prospects? Do you see any specific pressure in any specific segment, or is it just about because of the natural calamities which we are getting exposed to in a larger extent? Can you throw some light on this?
Sure, Mr. Joyce. I think you have also given a part answer in your question itself. So what has happened that at least maybe 30 years or 40 years, there were no major cyclones, and rains were never there. I've talked to many people who have lived in this part of the world, and they have said that they've never seen heavy rain in their whole life in 30 years ago. But then Gonu, there was a major cyclone. But after that, once Mekunu happened, after that, the frequency of the heavy rain or cyclone has increased. So due to this reason, the reinsurers, which earlier used to price their product and give us commissions that was based on the good loss ratios, because there were no rains in that particular risk area and cyclones were not there. So they were having very profitable portfolios. So they used to give us very high commissions, which is good because it was profitable, it should be paid. And they also thought, while they were pricing these products, that there will not be future cyclones or rains also will be similar to before. So that's why the contracts used to have those kind of good reinsurance incomes. But after Makunu, then almost every 1 to 2 years, there is a major or medium-sized cyclone is coming now. And in last year, this cyclone Shaheen was very devastating. Then if you look at this year also, in January, there were heavy rains. Then in June, there were heavy rains. And then in July also, there were heavy rains. Due to this reason, now I no longer, when I discuss with reinsurers, I can no longer tell them that, okay, this is a one-off. The next cyclone may come after 10 years, 15 years. So now they say that now they expect heavy rain or that kind of related effects maybe every year. So due to that reason, they have become, and also the claims related to that has hit them. So due to that reason, now the reinsurer commissions will be reflecting those claims. And we are conscious and we have to work within that range. And it has to be profitable, not only for us, but also for the reinsurers. Otherwise, the capacities will shrink. So which is very important for us to keep the reinsurance capacities from the well-rated, A-rated reinsurers. So that's the reason we have to create a balance and manage the balance in this.
So how do you think this is shaping up? Will it have any impact on your ceding levels, or will it have any impact? You have both impacts will come, isn't it? From the ceding level, from the reinsurance side, as well as from the commission side. So how do you try to balance it, and where do you see this taking us?
Thank you. Thanks for this question. So what I would like to say that we have managed it well in last few years, and whatever impact is there, we think it is the impact which we should manage with this particular, and I do not see further deterioration on that side. So we will manage with what we have. We have had the past long-term relationships, and we are balancing these commission levels. And I would like, and I have a view that this will be a consistent in future also. Okay,
got it. And what's your outlook for the entire market? Now we are a very stable market, and there is a lot of intra-segment dynamics that's happening right now, especially with the consolidation that's happening, and now the regulatory side also. We are seeing the regulator is very proactive and very active as well. New regulations are coming in, and the health insurance is going to be mandatory. So how do you see the market going forward? Do you see any specific changes that's going to happen in the market and in the business?
See, I'm optimistic about the market, and I have a view that we are going in the right direction. So the market is also backed by the economic activity in the country, and which is happening. If you look at last few years' time, and now you will find that after the COVID is over, the government has taken many measures to kickstart the economy and bring vibrancy into the economy. And we are now seeing that things are moving. So insurance will be riding on the economic growth of the Sultanate, and we will grow on that. Number two, regulator is very proactive, and they are working towards many innovations in this market, which like mandatory health, they are already working on platform, the Mani platform, where all the service provider hospitals, they are linked to it, so that seamless service is there. Once mandatory health comes, it will bring in this medical insurance premium, which will be new medical insurance premium, and which will accrue to the insurance companies and help the insurance company in further growth. So I am optimistic in next 3 to 5 years, there is a growth phase for the insurance industry.
But when the mandatory insurance comes in for health side, do you see that pricing power is with the companies, or will it be generally there will be a minimum price set by the regulator, and then the companies will be given up with the options or add-ons? How do you see the pricing goes on?
See, as of now, I cannot predict what regulator will decide as of today, because, but what I can say that till now, the regulator has a view that they like insurance companies to price their own products. Obviously, regulator will definitely look at our pricing. They will look at whether it's adequately actuarially undertaken, study has been taken, it's justified, and then they will approve the products. That is how the regulator is working here. So as till now, regulator has not brought about any minimum price in the market for any product till now. So whether for mandatory they will bring or not, considering their past approach, we are not sure that they will like to bring mandatory, but rather this fixed price, they would rather leave it to the insurance companies to do actuarial study and have a product which is well balanced, and at the same time the product should be affordable for the customers as well. So regulator will look at whether you have done actuarial pricing properly and whether that pricing is the right price. It's not, you are not trying to make super profit, or that is not a price which will lead to bleeding for the company. If you have maintained that balance, regulator will let you work with your pricing. So I have this view.
Thank you. I have a few more questions, but I see there is a queue for questions, so I'll take a step back and then come back later.
Okay. Thank you, Mr. Joyce.
Any questions?
So if anybody else has a question, we are open to that.
Thank you.
Okay.
So yeah, in that case, can I continue?
Yeah, please.
Yeah. Okay. The next is on your bond conversion. You have converted the bonds last year, was it? But at the same time, you have just mentioned in your presentation that you have adequate solvency levels. So why was the bond conversion happened? Do you see further conversions in the coming years?
See, we have to look at that. What is our expansion plans? And if you look at my Dhofar Insurance growth path, so that growth path you look for last 3 to 4 years. We are the company which is having highest growth since last 3 years plus, and we are growing consistently close to double-digit numbers. So, and what is our business plan? That is also to grow in the similar fashion. So, in order to grow, we need to have sufficient capital, and I do not want to suddenly find out in the middle of the year that I'm growing fast and then I need a capital to be within the solvency regulations. So with that growth path in mind and how I want to work towards it, it was a preemptive action to convert so that we are adequately protected when we grow. Number two, when mandatory health will come, if it comes now, there will be an additional business growth which will come from the mandatory health. So for that also, I need to be properly solvent and having my minimum benchmark covered. So with that futuristic outlook, we have done this so that not only our growth path in normal business is covered, but also whenever mandatory health also is launched by a regulator, we are adequately ready for that as well as the capitalization part is concerned.
So should we expect further conversions from this bond, or did you?
Yeah, it depends on our assessment because my CFO and other team members, they actively work on these numbers and they calculate how our growth is going to be and whether for that growth we need to do this or not. They do this exercise every year, and when we find that there is no need, we don't do it. And if we get this calculation and there is a recommendation from them that it is required if we want to grow in the fashion as per the business plan, which we have for the next year, if that business plan will warrant this, then it may be. And if it doesn't warrant, then it may not. So that is how we approach it.
Got it. And on your receivables, I see that there is some a slight uptick in the receivable segment, especially from the general and motor segment. How do you see the pressure in receivables? Do you see any pressures in receivables, or do you see any delay in collections or anything like that? Can you what's your take on this?
See, if I would like to see, if you compare the receivable, our percentage receivable compared to the other companies, you will find that Dhofar Insurance has the minimum percentage which is under this section from the percentage perspective. That is first part. So that shows that our collection team and our clients, they are definitely supportive to us and by paying the premium on time. But at the same time, in the last couple of years, there have been certain areas where there is a delay in payment from the customers. So due to that reason, receivable would have been increased, number one. Number two, part is that we have growth. A lot of growth has happened if you look at it. So that growth, if you look at 30% growth, that means more business has come to the Dhofar Insurance. So that also will add to the receivable part on the quantum side. So more premiums, so more receivable on the quantum side. So both are there and we are managing that.
Okay. Okay. Yep. Thank you. And should be the impairments from that receivables will be something like the normal trend. Should
yes.
we be there is no need for it.
That is a normal trend, and we have a policy and everything in place. And as per that, we do it on regular interval as per our policy. So it is happening. There is no concern on that side.
Okay. Okay. Thank you. Thank you,
very
Mr.
much.
Sunil and team. That's it from my side. Wish you all the best.
Thank you, Mr. Joyce. So I think if any other question is there.
Any question from anybody or?
Thank you, Mr. Omar. Thank you.
Okay. So with this, I think we thank all the participants for their active participation and their patience to look at a dry subject like insurance and listen to us patiently. And we look forward to our next meeting as per the schedule. Thank you very much and all the best to you. Have a great day ahead.